This episode was produced using AI-generated voices and scripting. Okay, so here's what I keep coming back to. Everyone's talking about the $25 billion number. Amazon investing up to $25 billion in Anthropic. And I think the number is the least interesting part of this story.
It's genuinely the least interesting part, because the number without the structure is just a headline. The structure is a $100 billion infrastructure deal where Amazon is building out data centers, custom chips, networking, all of it, specifically to run Anthropic's models. That's not an investment. It's a merger without the paperwork.
Okay, but hang on. Amazon already had a stake. They'd already put in, what, 8 billion before this?
4 billion initially, then another 4. Yeah. So the prior commitment was 8 billion. Now they're saying up to 25 billion more on the equity side. But the real commitment is the 100 billion in infrastructure spending. And that's not all Anthropic specific, to be fair. Amazon's building AI infrastructure broadly. But the deal is structured so that Anthropic is the anchor tenant, the preferred customer. The whole reason the build out is happening at this scale.
So Anthropic gets a guaranteed compute pipeline and Amazon gets, what exactly? A captive AI company?
They get distribution lock-in. Anthropic's models run on AWS. Anthropic's customers come through AWS. The Trainium chips Amazon's been developing. Anthropic commits to using those for training and inference. And that's the part nobody's saying. This isn't Amazon betting on Anthropic. This is Amazon using Anthropic to justify a massive CapEx cycle for AWS and to make its custom silicon program credible.
That's the whole game right there. Because nobody was buying Trainium on its own merits.
Well, I mean, that's a little harsh, but directionally correct. Trainium has been Amazon's answer to NVIDIA's dominance, and the market has been skeptical. If you can say the company behind Claude is training on our chips, that changes the conversation overnight.
Right. So let me push on something. Anthropic keeps saying they're independent. Daryl Day was very clear. Anthropic maintains its independence, its own board, its own safety policies. How real is that when your primary investor is also your primary compute provider and your primary distribution channel?
It's real in the legal sense. It's not real in the gravitational sense. Like, Anthropic's board still controls the company. Amazon doesn't get a board seat from what we know. The governance structure is designed to preserve Anthropic's public benefit corporation status and its safety commitments. But when 80–90% of your inference runs on one cloud, and your chips are designed by that cloud provider, and your go-to market is through that cloud provider's sales force, independence is a spectrum, not a binary.
And this is where Google gets interesting, because Google has its own stake in Anthropic, around $2 billion. And Google Cloud is technically also a partner. So Anthropic is taking money from 2 of the 3 major cloud providers who are also direct competitors.
That's not what's happening anymore, though. That was the old framing. Before this deal, you could say Anthropic was playing the field. AWS, Google Cloud, maybe others. After this deal, Amazon is the structurally embedded partner. Google is an investor who also happens to offer cloud services. The asymmetry is enormous now.
So does Google just eat that? $2 billion investment in a company that just became an AWS franchise?
I think Google's calculus was always different. Google has Gemini. Google has DeepMind. The Anthropic investment was partly strategic hedging and partly, let's be honest, a way to keep Anthropic's models available on Google Cloud so enterprise customers didn't defect entirely to AWS. But now, with a $100 billion infrastructure commitment on the other side, Google's leverage just evaporated.
Who does that actually help, though? Like, if I'm an enterprise customer looking at Claude, does it matter to me that Amazon's the one building the data centers?
It matters a lot, actually, because one of the biggest friction points in enterprise AI adoption is where the model runs. If you're already on AWS, and half the Fortune 500 is, and the best model for your use case is Claude, and Claude runs natively on AWS infrastructure with Amazon's custom chips optimized for it, there's zero reason to look elsewhere. The iteration just got tighter. Bedrock becomes the obvious platform.
Amazon Bedrock being their managed AI service.
Yeah, it's the layer where you access foundation models through AWS. And Anthropic's Claude has been the flagship model on Bedrock. This deal essentially guarantees that it continues and deepens. Anthropic isn't going to build its own enterprise sales team to compete with AWS's sales team. Why would they?
Okay, I want to be a little provocative about this. I think this deal is bad for Anthropic long term.
Go on.
They've been positioning themselves as the safety first, independent, responsible AI lab, the adults in the room, and the way they've maintained that credibility is by not being owned by a tech giant. OpenAI has Microsoft, Google has DeepMind, Anthropic was the one that could say, "We answer to our mission, not a platform." That story just got a lot harder to tell.
I actually, I think that's half right. The independence narrative takes a hit, sure. But here's the counterintuitive thing. This deal might make Anthropic more independent, not less. And I know that sounds insane, but hear me out. Before this deal, Anthropic was burning cash at a staggering rate. The cost of training frontier models is in the billions now. They were going to need to either go public, get acquired, or find a sugar daddy. This deal means they don't have to do any of those things. They have guaranteed compute, they have guaranteed capital, and they kept their governance structure. Compare that to OpenAI, which had to restructure into a for-profit entity and is dealing with lawsuits from its own co-founder. Anthropic actually threaded the needle here.
Wait, seriously? You think being structurally dependent on Amazon for compute, chips, and distribution is threading the needle?
I think it's the best deal available in a world where training runs cost $3, $4, $5 billion, and you need custom data centers to do it. The alternative was what? Self-funding? They'd run out of money. Going public? That's its own nightmare of quarterly pressure. Getting acquired? Then you definitely lose independence. This way, they get the resources of a tech giant without being a subsidiary.
The resources and the leash.
Maybe, but it's a long leash. And the public benefit corporation structure gives them legal cover to prioritize safety, even when Amazon might prefer they prioritize shipping fees.
Okay, but hang on. Let's talk about the numbers because I think people gloss over the scale here. $100 billion in infrastructure. For context, that's more than the GDP of what, half the countries in Africa?
The actual number is wild when you contextualize it. Amazon's total capex last year was around $75 billion, and that was already a record driven by AI spending. Now they're committing to $100 billion in AI infrastructure as part of this single deal framework. Even spread over multiple years, that's a fundamental reorientation of where Amazon's money goes.
And that puts pressure on Microsoft and Google to match.
Enormous pressure. Microsoft's already committed something like $80 billion this year to AI data centers. Google's in a similar range. But here's the thing. Microsoft has OpenAI as its anchor tenant. Google has Gemini internally. Amazon didn't have a credible frontier model partner until Anthropic. This deal closes that gap. Now every hyperscaler has a captive AI lab and the arms race is fully locked in.
Which brings up the question nobody wants to ask. Is any of this going to generate enough revenue to justify $100 billion in infrastructure?
That's the existential question for the whole industry. And honestly, nobody knows. Amazon's betting that AI inference becomes as fundamental to cloud computing as storage and compute already are. That every application, every workflow, every business process will have an AI layer, and if that happens, owning the infrastructure stack from custom chips to foundation models to the API layer is worth $100 billion, easily.
And if it doesn't happen,
Then everybody's in trouble, not just Amazon. The entire hyperscaler complex has committed hundreds of billions collectively to a bet that AI workloads will grow exponentially. If that growth stalls or plateaus, you've got the most expensive stranded assets in the history of.
but that's not an Anthropic problem. That's an Amazon problem.
Exactly. And that's another reason this deal is clever from Anthropic's side. They've externalized the infrastructure risk. If the bet pays off, they benefit from world-class compute. If it doesn't, Amazon eats the capex write-downs, not Anthropic.
Huh. Okay, that's actually a good point. I hadn't thought about it that way.
And nobody's saying this. The Trainium angle is huge for Amazon's chip ambitions. NVIDIA has like 90% market share in AI training chips. Amazon's been pouring money into Trainium to break that dependency. But chip adoption is a chicken and egg problem. Nobody wants to optimize for a chip nobody uses. Now Amazon can say, Anthropic trains on Trainium. That's the single most important reference customer they could have.
So, Anthropic is doing Amazon a favor on the chip side.
It's mutual. Anthropic gets below market compute costs, presumably, and Amazon gets credibility for its chip program. But yeah, there's an asymmetry there that I think favors Amazon more than people realize.
Let me come back to something you said earlier about Google's leverage evaporating. I actually think Google's position is more interesting than you're giving it credit for.
How so?
Google has Gemini, and it's actually competitive now. The latest Gemini models are genuinely good. So Google doesn't need Anthropic the way Amazon needs Anthropic. Google invested in Anthropic as a hedge. If Anthropic becomes an AWS captive company, Google just shrugs, doubles down on Gemini, maybe even sells the stake at a profit since Anthropic's valuation has presumably gone up.
No, actually, it's more complicated than that. Google still wants Claude available on Google Cloud. Enterprise customers want optionality. If the best model for a particular task is Claude, a Google Cloud customer doesn't want to hear, sorry, you need to switch to AWS. So Google has an incentive to maintain the relationship, but their negotiating position just got way worse.
Right. Because Anthropic doesn't need Google Cloud the way they need AWS anymore.
Exactly. Before this deal, Anthropic could play the clouds against each other. Now there's a clear primary. Google Cloud gets whatever access terms Amazon is comfortable with, which is a wild dynamic when you think about it.
Okay, bigger picture. You said earlier this is a merger without the paperwork. I want to push on that. Because if we look at the pattern, Microsoft and OpenAI, now Amazon, Anthropic, are we just watching the AI lab layer get absorbed into the cloud layer? Is the independent AI company dead?
I think independent AI at the frontier is dead or dying. The cost of training frontier models is simply too high for a standalone company to bear without a hyperscaler partner. You need billions of compute, you need custom data centers, you need chip supply guarantees. Only 3 companies on Earth can provide all of that: Amazon, Microsoft, and Google. And now all 3 have their AI lab partnerships locked in.
Meta does it internally.
Meta does it internally, right? But Meta's also spending 50 plus billion a year on infrastructure. The point is, this is a 4-player game at most. And the AI labs, Anthropic, OpenAI, DeepMind, they're becoming the research divisions of the cloud providers, whether they admit it or not.
That's bleak if you care about competition.
It's bleak, and it's also maybe inevitable. I mean, the FTC has been looking at these deals. There's been scrutiny over whether these investment structures are effectively acquisitions that should trigger antitrust review. Amazon structured this carefully. No board seat, minority stake. Anthropic maintains its PBC status. It's designed to not look like an acquisition.
But it walks like one and quacks like one.
In functional terms, yes. The economic relationship is more entangled than most actual acquisitions, but legally, it's clean, and that's by design.
You know what this reminds me of? The way studios and theaters used to be vertically integrated before the Paramount decree broke them up. You make the content, you own the distribution, you own the venues. Amazon makes the chips, hosts the model, and sells access through its own platform.
That's a good analogy. And it took decades and a Supreme Court case to unwind that in film. We're building the same structure in AI in like 3 years.
Let's talk about the Anthropic valuation for a second. Because if Amazon is putting up to 25 billion in on top of the prior 8, what does that imply about where they think this company is headed?
Anthropic was last valued around 60 billion in its most recent funding round. With this additional investment, the implied valuation could be significantly higher. Some estimates put it at 100 billion plus depending on the terms, but I actually think the valuation is a distraction. The value here isn't equity appreciation, it's the strategic positioning. Amazon doesn't care if Anthropic stock goes up 10%. They care that AWS becomes the default platform for the AI era.
That's the whole game right there. The equity investment is the entry ticket. The infrastructure deal is the actual play.
Exactly. The 25 billion gets the headlines. The 100 billion in infrastructure is the commitment that actually reshapes the industry. And once those data centers are built and those Trainium clusters are deployed, the switching costs become astronomical. Anthropic can't leave even if it wanted to. Amazon can't abandon the partnership even if Anthropic disappoints. They're locked into each other.
Okay, last thing I want to get into. We keep talking about this as an Amazon Anthropic story, but I think the real story is about what this means for every other AI company that isn't Anthropic or OpenAI.
Oh, it's devastating. If you're Cohere, if you're Mistral, if you're any of the mid-tier AI companies, your path to market just got narrower. The hyperscalers have their preferred partners now. You can still list on Bedrock or Azure or Google Cloud, but you're not getting $100 billion infrastructure commitments. You're a third-party app in someone else's ecosystem.
And the open source models? How does this affect, like, Meta's Llama or
Open source is actually the interesting counterfactual. Because if open source models keep improving, and they have been, then the value of being the exclusive frontier model on a cloud platform diminishes. Why would I pay for Claude on Bedrock if Llama 4 is 95% as good and I can run it wherever I want?
Right. So Amazon's $100 billion bet is partly a bet that open source won't close the gap.
It's a bet that the frontier matters, that there's always a meaningful capability gap between the best proprietary model and the best open source model, and that enterprises will pay for that gap. If that stops being true, if open source catches up, then this whole structure is overbuilt.
Which circles back to your stranded assets point from earlier.
It does. It all does. Every piece of this deal makes sense in a world where AI capabilities keep scaling, where the frontier keeps advancing, and where the cost of training keeps going up. If any of those assumptions break, the math changes dramatically.
And yet, everyone's acting like those assumptions are laws of physics.
Because so far, they have been. Scaling laws have held for years. Every generation of model has been meaningfully better, but there are credible researchers, people inside these labs, who think we might be hitting diminishing returns on pure scale. And if that's true, then what you need isn't more compute. It's better algorithms, and you don't need 100 billion in data centers for better algorithms.
So the bear case is that Amazon just committed $100 billion to solving a problem that might get solved by a PhD student with a clever idea.
I mean, that's the extreme version. But yeah, there's a world where the next big leap in AI comes from architectural innovation, not brute force compute. And in that world, all this infrastructure is, it's still useful, it's still valuable for inference, but the strategic lock-in matters a lot less.
I love that we've gotten to the point where $25 billion is the boring part of a deal, and the interesting parts are chip strategy, antitrust theory, and whether scaling laws hold.
Welcome to 2025, where the numbers are so large they've lost all meaning, and the only thing that matters is the structural game underneath.
All right, Amazon Anthropic, 25 billion in equity, 100 billion in infrastructure. The cloud wars have an AI layer now, and there's no going back.
There's really not.